Meltdown, a four-part investigation of the orgy of greed and recklessness that drove the world into financial collapse. Only now are the hard questions being asked. Only now are the key players being held to account. In this hour, the story of the men who crashed the world. The billionaire mortgage seller who fooled millions.
Everybody wanted to own a piece of real estate to get into the game.
The high-rolling banker with a fatal weakness.
Jimmy Cain tried to handle what looked like a joint. I'm not kidding.
The ferocious Wall Street predator.
I want to reach in, rip out their heart, and eat it before they die.
And the power behind the throne.
The de facto president of the United States was an unelected gentleman from Wall Street.
Meltdown, the secret history of the global financial collapse. The crash of September 2008 brought the largest bankruptcies in world history, pushed over 30 million people into unemployment, and brought many countries to the edge of insolvency. Wall Street turned back the clock to 1929.
The tremendous crowds which you see gathered outside are due to the greatest crash in the history of the New York Stock Exchange.
After the Wall Street crash of '29, which led to the Great Depression, the U.S. Congress launched an official investigation.
Interest in the senatorial bank investigation as J.P. Morgan arrives to testify.
J.P. Morgan was among the business titans to be called to account by the Pecora Commission. Flash photography was introduced to heighten the spectacle. In 2010, the same model is followed for a new investigation of a new financial collapse.
Panel, ladies, photographers, move aside.
Former California Treasurer Phil Angelides is chairman of the Financial Crisis Inquiry Commission.
I'm honored to welcome you as we start this series of public hearings into the causes of the financial and economic crisis.
He has taken sworn testimony from a parade of government and bank officials, trying to get to the bottom of what really caused the 2008 meltdown.
The consequences of this financial crisis have been grim also. 27 million Americans who are either out of work, can't find full-time work, or have stopped looking for work. Millions who have lost their homes, and millions more who are in the foreclosure process. Trillions of dollars of wealth loss. I think one of our jobs is to try to rationally explain to people what the heck happened. People want to know.
How did it all go so wrong? The key trigger of the 2008 financial meltdown was easy lending in the U.S. housing market. In an era of very low interest rates and reduced bank regulation, there was an astonishing building boom across the United States. In California, banks decided that virtually anyone could qualify for a home loan. Jim Kling has been a real estate agent in San Diego for over 20 years.
Really, in 2004 and 2005, if you could fog a mirror, you could get a loan. That's how bad it was. They didn't really know or care about the qualifications of the buyers.
And a payment on that.
And whether those people could make those payments or not apparently wasn't much of a concern.
Bills getting to be more than you can manage? Crossroads Mortgage has a whole range of solutions geared to people just like you.
So if you're thinking of buying a home or refinancing?
Even if your credit is less than perfect, AmeriQuest can help. Call 1-866.
Banks began making what were called subprime loans to people who could ill afford to pay back the money, especially if house prices ever went down. The one man who could have stopped that practice was then U.S. Federal Reserve Chairman Alan Greenspan. For 20 years, the world's most powerful banker. Greenspan was revered in Washington. His power feared even by presidents.
The Federal Reserve was the one agency that had the full authority to regulate subprime lending. And despite all the evidence, despite all the yellow and red lights going off, they chose not to.
Staff reports. I mean, let me just ask you, would you put this under the category of oops? Should have done it?
I mean, my experience has been, in the business I was in, I was right 70% of the time, but I was wrong 30% of the time. And there are an awful lot of mistakes in 21 years.
And I would point out that the captain of the Titanic was 99% right and 1% wrong. It's the size of the mistake that matters.
We now know that banks and mortgage companies were indulging in all sorts of fraudulent practices to pump up their mortgage business. Many of the loans were extremely complex and the terms hidden from borrowers. There were low teaser rates that would automatically reset to much higher payments after a few months. It was no accident that the most complex mortgages were sold to the least sophisticated buyers, especially in poor and minority neighborhoods like this one in South Central Los Angeles.
So as you go about your daily work and your daily business,
Congresswoman Maxine Waters has represented the district for 19 years in the U.S. House of Representatives.
Information. You know, I've seen mortgages that were given to 70-year-old people who were on a fixed income, whose income was never going to increase, but that mortgage was going to reset within a few years. Where was that money going to come from? I've seen mortgages that I think are criminal.
Angelo Mozillo was the undisputed king of the U.S. subprime market. He is called the Golden Boy because of his permanent tan and because at the height of the subprime real estate boom, he was making about $100 million a year.
Everybody wanted to own a piece of real estate to get into the game.
He became the darling of business magazines with a slew of fawning profiles of his rags to riches story. He always claimed that he was a friend to the poor and that his lending practices were helping scores of Americans attain the dream of home ownership.
It's one thing for him to say that he was a friend to the poor, but in the final analysis, when you see that these poor people are now in foreclosure, now cannot get loan modifications, now ending up on the streets, then certainly that defies how he could have been, you know, a friend to poor people.
Mozillo's company, Countrywide Financial, grew to become the biggest mortgage lender in the United States.
Call Countrywide. We never stop thinking about what you need. And that makes home buying easy. Really.
Countrywide was sold to Bank of America and almost immediately plunged in value. Angelo Mozillo was placed under investigation by the Securities and Exchange Commission. The SEC uncovered very damaging private emails in which Mozillo expressed his true feelings about the dangerous subprime mortgages he was peddling. He wrote, "In all my years in the business, I have never seen a more toxic product." At the same time, Mozillo was publicly reassuring all his investors and clients. Countrywide views the product as a sound investment for our bank and a sound financial management tool for consumers.
It does appear that there was a private view of the markets, and there was one that was espoused to borrowers, rating agencies, the investing public.
The SEC has now charged Mozillo with insider trading and securities fraud. Lenders like Angelo Mozillo really didn't care if people ever paid their mortgages because those loans did not stay on the mortgage company's books. Mortgages were bundled together with other loans from across the country and moved to Wall Street. There they were packaged up into complex new financial products. Bankers went wild for these financial securities that were really just stacks of IOUs. There was almost no government regulation of this market. It became a massive system of buying and selling these IOUs with fees being charged on each transaction.
It was just all a way to make fees and to package up these streams of supposed cash flows and sell them off to investors. I mean, for a while there, anybody who touched a mortgage made money. It was like the most perfect product.
I once had this view that when people started talking about toxic assets, that somehow they were like a good piece of fruit that had turned bad. Well, it turns out they were a rotten piece of fruit from day one. And all along the way, whether it was the broker, the lender, the securitizer, the market maker, everyone seems to have taken the view that they had no responsibility for the product that they were moving along in the system.
That became, unfortunately, this cancerous material that was injected into financial institutions all over the world.
One of the first places these toxic products landed was the financial district of London, England, nicknamed the City. There was a golden age here in the years before the meltdown. Geraint Anderson arrived in the city as a young trader in 1996. He had been a hippie selling trinkets on the beaches of India until his older brother found him a job in a London brokerage.
I literally didn't know what the city was. I mean, I kind of was aware that there was a stock market, and I said, well, why? I mean, you have to wear a suit and things like that. And he said, I'll tell you why. It's quite simple. You'll have about £300,000–400,000 within about 4 or 5 years, and then you can go off and live the life you want to live. Since the selling of trinkets wasn't going down too well, I thought, why not? I had no idea about finance whatsoever. I didn't know what a PE ratio was. I didn't know what a yield was. When you're in the city, all you have to do continually is present a view and present it strongly and pretend you believe in it. It was all about schmoozing clients, taking them to strip joints, taking them to bars, getting that company credit card out and really giving it a bash.
The wild atmosphere in Britain was brought about because Chancellor of the Exchequer Gordon Brown was easing financial regulation there. He called his new approach the light touch.
We will advance if there is light touch regulation, a competitive tax environment and flexibility.
Well, Gordon Brown light touch was an effort really to make the City of London the world's greatest financial centre. And it meant giving the financiers, giving the bankers a very free hand in the marketplace.
Paul Martin was Canada's finance minister in those years. He says deregulation came about because of a competition between New York and London to become the financial capital of the world.
The race to become #1 was very, very important. But how do you attract the financial industry? Well, the most logical way is what they call regulatory arbitrage, which simply says, let's gut the regulatory system, and therefore more people will come.
But the prevailing culture was one that the markets always go up. It was an easy way to make money, drinking champagne, fat cat analysts. It was a joyous time. Everywhere you looked, there was great big new offices being put up, statues being put in the forecourts, people building great monuments to themselves in terms of the buildings they occupied and the way that they behaved.
By 2004, Geraint Anderson was making a salary of $300,000 a year, plus an annual bonus of $700,000. He was invited onto business television shows as an analyst.
We had profit before tax growth of 9.5%. The whole game is increasing your bonus. You don't go into the city to do the world some good. You go there to make money as quickly as possible. And if that means lying, cheating and stealing, that's what you do. Regulators and politicians are just deemed to be idiots. It's all about we will thrive with light touch regulation. And that, of course, is exactly what Gordon Brown was encouraging as Chancellor of the Exchequer. And interestingly, he calls my precise period in the city the age of irresponsibility. But it was partly to do with the fact he just said anything goes. And, to me, it's just obvious. The way people were behaving was a rational way of behaving in the context of the bonus system and the lack of regulation.
Before long, the Anglo-American risky financial model was spreading around the world, from Iceland to Dubai. If one country could be the microcosm of everything that went wrong in the years before the meltdown, Iceland is it. It is a place of staggering natural beauty. From its geysers, to its waterfalls, to its famous Blue Lagoon, it is a magnet for tourists. One thing Iceland was never known for was